Welcome to my channel and this week review of stock markets and stocks in my portfolio. TSX was down 1% on the week, while all American indexes were up by almost the same percentage. Nevertheless, I am still expecting softening across broader markets over the summer, keeping at least 15% of my portfolio in cash for potential bargain hunting. Last week, I talked about how I added 2 companies to my portfolio, and how one of them, Source Energy, was bought without proper analysis. I decided to sell it this week, and I did. Of course, right after I sold it, the stock price surged almost 20%. This price action would have upset me in the past, and even put me in the bad mood for a few days. But as I am getting more experienced, making trading decisions based on a well-defined sets of rules becomes more important to me than the allure of any immediate price momentum. So, I don't have any regrets about selling something that I shouldn't have bought in the first place. Having a solid game plan is what excites me in stock trading now. And, as it usually happens when you have some extra cash parked on the side, I couldn't resist buying something else this week while screening the Canadian market. The first company I bought is called Fiera Capital Corporation. It provides investment management services to other institutional investors, mutual funds, charitable organizations, and private clients. I like the idea of keeping some of my money with an investment management company, but instead of paying them a fee like with mutual funds, receiving a high dividend from them. As you can probably guess from my previous episodes, I was drawn by the magnitude of the dividend that this company pays. Based on my research, the company's valuation appeared to be quite reasonable, if not somewhat undervalued. The biggest concern seems to be revolving around the recent exit of a major shareholder, Desjardins, which triggered the price drop in April to May. But from what I am reading, most likely this exit will not have any significant adverse impact on the company's operations. So, I saw this price drop as a good opportunity to enter. I started with 75% of my usual allocation, and will consider adding more once the dust settles around Desjardins exit. Hope the company continues paying high dividend for the rest of the year. The second company I picked this week is from the west coast of Canada, from Vancouver, British Columbia. It is called Doman Building Materials Group. It pays relatively high dividend, has market capitalization of only $600 million, and quite impressive revenue of $2.5 billion. It sells wholesale building materials and home renovation products in Canada and the United States. What attracted me to this company, other than its dividend yield, is the 5-year chart. It shows my favorite pattern for an entry point, with strong underlying uptrend, consistent price channel, and a current price touching lower resistance line of the channel. I do have some concerns about this company. First, it carries nearly $1 billion debt, which is quite high. In current interest rate environment, I prefer companies with relatively low debt. And my second concern is the industry. There are so many factors that may crash the demand for home construction and renovation materials, making this business look rather risky. So I decided to open only half of my regular allocation, recognizing some potential dangers around the company. We'll consider adding more once I start getting more comfortable with my understanding of the company and the industry it is in. And lastly, I wanted to mention the biggest movers in my portfolio by price change over the week. The price of Transcontinental moved up 7% this week. I mentioned in one of my previous episodes that I was expecting upward momentum in the price of this company. And looks like it is starting to happen. The company just published its Q1 earnings report, and it made me a little nervous. Both revenue and earnings were weaker than last year. But I think investors still see some good value in this company, and there was some high volume buying after the earnings report. My target price to sell half of my position is around $17. Let's see if we can get there by the end of the summer. The biggest loser of the week in my portfolio was Celestica, which went down 7%. I also mentioned this company in my previous episodes, and that I was waiting for a correction in its share price. The chart is finally showing signs of a correction. Hope we see the price drop to at least $65, which is where I would like to start re-entering, and finally increase my position from 50 to 100%. I still like Celestica as a business, and would be happy to have a full position in my portfolio, especially at a discount price. Well, that's all for this week. I think over the next few months, the markets will have a very bumpy ride, so you better buckle up. Happy trading, and see you next week.